Hello again, welcome to another episode of the Uranium Market Minute. Today is Thursday, February 24th, and this is episode number 82. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. As always, before we get into it, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, very, very exciting day in the markets. I'm going to fly through the daily scoreboard and the charts, and then I want to discuss some things that I'm seeing in the markets today. Very, very exciting stuff that we're seeing in the uranium space. All right, daily scoreboard. Spot price of uranium up over $1, 44.25 a pound. Looks like there's some volume coming back into the spot market. Probably some of that, at least some of that, is coming from spot. Yesterday, they managed to raise 15.2 million in new capital, purchased another 100,000 pounds. That puts them year to date at 4.7 million pounds of purchasing, 226.8 million in new capital raised. They closed at a healthy premium to NAV yesterday at 1.6% above NAV, and the stock has traded up quite nicely today. They likely have been issuing shares like mad. I would not be surprised if they've raised north of 20, possibly $30 million today. They're sitting on 43.6 million cash as of the close yesterday. Neither URA nor URNM issued any new shares yesterday. They're still sitting at all-time high outstanding share counts, which we've noted over and over and spent a lot of time in the members webinar last week, deep diving into what that means for the sector. Of course, that was a tell. I'm going to talk about exactly what is a tell in the mailbag section in just a moment. Let's look at the charts really briefly. Starting off, as usual, with URA up 2.6% on the day with the broad markets down. This is yet another day of decoupling. In fact, the decoupling was even greater earlier in the day. The S&P opened up down about 3%, with the futures down heavily overnight with the invasion of Ukraine by Russia hitting the news flow. However, the S&P has recovered substantially. It's almost flat on the day, but URA still up pretty nicely, 2.5% on the day. Taking a look at the Sprott Physical Uranium Trust, up 2.7% on the day. Substantial volume here. Like I said, I think that they're issuing a decent chunk of shares and raising some cash today. But really the story of the day is the decoupling. Let's look at a chart of Cameco relative to the S&P. Big day. Now, Cameco on the day is up over 8%, I believe, at this point. Still, we've got an hour and a half left of trading, roughly speaking. But still, this decoupling from the S&P is significant. I highlighted this yesterday, that we have this substantial trend line that we did hold coming up the last couple of weeks. And then today, obviously, with a really big day of outperformance by Cameco relative to the S&P. And then, of course, if you zoom out on this, which we will, look at the weekly chart here, we can see exactly how far we have to go. I love seeing that 200-week moving average of Cameco compared to the S&P moving up. We are trading above a rising 200-week moving average of this chart, comparing the two. Really significant. And of course, we have a very long way to go in this bull market when it comes to outperformance of the broad indices. All right, mailbag section. So there's obviously, I've had a couple of questions come into me asking about, I talked about the decoupling of the uranium market from broad indices yesterday. And we are seeing that continue to happen today, and even more so today. And of course, overnight, we heard news of Russia, and also throughout the day, news of Russia actually invading Ukraine. Now, this is something that the markets, I don't believe, were pricing in. There clearly has been an increase of instability in that region. Putin signed, along with the leaders of the separatist regions in eastern Ukraine over the weekend, a resolution, a joint resolution to recognize the independence of these areas, which basically was Putin saying, okay, these are now mine. Then overnight and into the day, we're hearing reports of Russia actually invading other areas of the country into Ukraine, and all of the implications that could go along with that. Clearly, of course, we always pray for diminished conflict in terms of actual kinetic warfare here. This is not something that anybody wants to see. I think that the EU and all of the NATO countries as well are obviously not happy with what's happening here. with Russia showing a strong hand coming into Ukraine. So we're going to have to watch how this plays out. However, I do want to talk about the way that the market is interpreting this, the uranium market specifically, because that's what we talk about here at Uranium Insider, of course. There's a couple of things I want to mention. First of all, this situation is what we would consider an exogenous event. Okay. What is an exogenous event? Definition of an exogenous event means an event that comes from the outside. In terms of the stock market, it means an event that occurs outside the scope of modeling. Clearly, this Russian aggression was not something in anyone's modeling even a couple of months ago. I think actual kinetic warfare and physical military conflict was not something that was on anybody's bingo card, even last month. Okay, this is not something that the markets have priced in, both the broad markets or the uranium market. Okay, this is an exogenous event. Unexpected events like this often lead to sudden shifts in previous mindset. We would suggest that utility complacency about security of supply and proper geopolitical diversification regarding future sources of uranium could take on some urgency. That is what I think the uranium market is pricing in currently, is expectations that this situation could create some urgency in terms of global nuclear utilities, especially Western nuclear utilities, seeking to cover any uncovered requirements more urgently because of this situation. So we had and it's not a direct comparison, but something similar in terms of an event that caused a bit of a panic over supply. And something that happened back in 2006 was the first flood of the Cigar Lake mine. That was a mine that had recently come online in the production that led to the production from Cigar Lake, really led to the market's expectation of a balanced market, right? So there actually wasn't a structural deficit of supply at the time in the previous bull market. But when this flood hit Cigar Lake, obviously the market reacted to that. And that really was one of the big catalysts that sent the price of uranium really into a strong upward trajectory, as it had already been rising for the previous couple of years. But that really lit a fire under the price. Now we have this situation where the potential for interruptions to supply of uranium coming from Russia or Russia-controlled areas such as Kazakhstan is on the table. Okay, that's something that nobody was pricing in even a couple of weeks ago, and that's something that very well could pan out in some way or another. This could lead to capital markets being unwilling to take on the risk of funding purchases of coming from a country that's being sanctioned. It could lead to actual sanctions on Russian supply. It, of course, could lead to Russia cutting off these critical materials to their adversaries. These are all, of course, speculations, but in our opinion, that's what the market is starting to price in, is this potential situation that could impact the flows of the actual physical commodity. And it could. Is that something we're betting on? No, of course. We're always just long this sector for the long term based on the overall supply and demand fundamentals and the growth of the sector, the renaissance of nuclear energy, et cetera, et cetera. But these sort of exogenous events do happen time to time in markets, and they do have an effect on shifting previous mindsets. So like I said, the previous bull market was in surplus at the time of the Cigar Lake flood. And now we are actually in a structural deficit this year, a substantial deficit this year. And of course, that deficit dwindles a bit with the expectation of McArthur River coming online, but then it just continues to grow out towards the end of the decade because of the growth in the sector that is being priced in and being expected here. So in a sudden broad market price gap to the downside, we would expect uranium market equities to weaken. That's what we expected this morning. In fact, seeing the news flow start to come in the evening, we were expecting a pretty nasty day in the uranium market today, thinking that even though we were starting to see signs of decoupling, that we weren't going to escape this one, guys. But very, very interesting to see big volumes in Cameco as one of the biggest winners today, probably because the market is expecting that Cameco will be one of the big winners in terms of new contracting volume coming to Cameco, going away from the West. If you want to reduce your risk as a utility by contracting less coming from Kazakhstan or from Uranium One that has JVs in Kazakhstan, outside of that jurisdiction, your options become pretty limited. You can buy from Australia, you can buy from BHP, their Olympic Dam in Australia, you can buy from Cameco that's producing in Canada. The US is still barely producing anything at all, so that's not really an option currently, although we are hearing some companies in the US are starting to sign some contracts with utilities for future production, which is a good sign. And of course, there's Namibia, production coming from Namibia in terms of primarily the Chinese that are producing at Husab and at Rossing. So your options are pretty limited, and Cameco is one of the best options for utilities to seek pounds coming from the West that are outside of Russian or potentially Chinese control here, right? So that's probably why Cameco is doing pretty well. So that is the exogenous event that is creating this shift, okay? So looking at the markets and the way that they're reacting to this, that is what is called a tell, okay? So a tell basically is when you see something like the market's reaction that you were not expecting, okay? It's a very particular price action against an unusual backdrop. So price action is one thing. So what's another tell? Another tell for us has been the ETF flows, okay? So seeing the sectors sell off as they have, starting in, third week of November through December and into January, during that sell-off, we did not see significant outflows in terms of ETF shares. We did see a little bit in December, that starting in January, the inflows began to increase. So to see net inflows into the ETFs during the sell-off, that was and is a big tell for us. That means that smart money and large institutions are not bailing out of the sector. That obviously would be a bad sign. That is something I would highlight if I were seeing it. Of course, we're not seeing that. What are we seeing? ETF inflows. That is and was a big tell. Okay, so what is the tell today? The tell is that the uranium sector is strongly green during a time when the S&P, the broad markets, and almost everything is in the red, and substantially so for the day. That is a big tell, okay? So what does that mean? That basically means that we believe that the market action that's happening right now is going to lead to further positive market action. And it could be, not saying it is, but it could be marking the bottom of this previous pullback that we've seen over the previous few months and the resumption of a potential bull market. It is also positive to see the spot price moving up on a day like this. That's kind of a feedback loop, right? The equities are moving up, the spot price is moving up. The equities, in my opinion, are moving up, not because the spot price is moving up, but the fact that it is sort of reinforces to some extent the reasoning why the equities are moving. Of course, we are going to get deep into this into our March newsletter that comes out next Wednesday. We're going to go deep into the subject of energy security, what it means for nuclear, what it means for our uranium investments. We're going to talk about the recent trades that we've taken on. Primarily, that will be this vertical bull call spread that we put on last week, or excuse me, that was 2 weeks ago, and the implications of that trade. And of course, talk about the situation in Russia and Ukraine. Last week was our members webinar for February. If you are a new member, you can access that at the very top of the members area of our website when you log in. I would suggest that if you are going to join or you recently joined as a member, go back and watch that 2-hour-long deep dive into the sector. There's some important points that we made, not only about that recent trade, but about the ETF flows and what we're expecting going forward. And of course, our members webinar in March is going to be even more exciting with all of these developments. If you are not a member, you are interested in joining, 2 things you can do. 1, click the link below in the description, and that will take you to a page where you can put your email address in, and we will send you access to a previous month's newsletter. That way you can get a better idea of the type of content we can put out, okay? And we do put out. 2, we do now have a quarterly option, not only an annual option. Of course, we suggest and strongly suggest that you subscribe as an annual member because this is a long-term investment. It's important to us that we have an ongoing relationship in terms of communications. To simply go in to get our stock picks and then leave is something that very, very few people actually do. And it's not something we suggest because you need to grasp the fundamentals. You need to grasp the long thesis thoroughly in order to be able to hang on during these periods like we just experienced in the past few months. And more importantly, have the conviction to buy or to add when sentiment is in the toilet and it's the time to be buying. that was over the past 4 weeks was the time to be buying. And we did pound the table on that repeatedly. So if you are interested in getting a taste of what we do have a quarterly option that is more affordable, of course. Obviously, if you stay on for a year, it is more expensive, and that's so that we can encourage annual memberships for the reasons that I just stated. But we do have that option. So with all of that said, really, I'm not pleased with the fact that there is war happening now, and that is, it's been a pretty quiet front in terms of war, relatively speaking, over the last 4 or 5 years. Now this is ticking up, and it's not a good thing. And we obviously pray for the people involved, pray for the Ukrainian people, and pray that this dissipates and it goes away. But of course, these things are out of our control, and we obviously are long the investments for the reasons that you know very well. And we obviously want to keep on top of this situation so that we can understand what's happening, what might happen, what could happen, and what the markets are saying about what could happen. And I think that that is pretty clear in terms of today's price action in the uranium space. All right. Thank you so much for listening. As always, if you do appreciate this content, I would love it if you did subscribe to the channel. Our subscribership is growing pretty fast, and I'm very grateful for that. And hit the notification bell. You will be reminded of any new episode we publish, which is almost every day. On that note, I will see you tomorrow. Thank you for watching, and be well. Cheers.